Assalamualaikum and hi everyone. This is the part B of topic Mfrs 116 property plant and equipment, and under part B of this topic we are going to discuss measurement of initial costs. This is for Mfrs 116 again, property plant and equipment. Under the lesson outcome for this session, it would be to determine the initial cost, which is the initial measurement, and also to be able to show journal entries for initial costs, the presentation of the costs in the financial statement, and also the disclosures in the financial statements. What is measurement? Under Mfrs 116, measurement follows the definition in the conceptual framework, which is a process of determining monetary amounts of which the recognized elements, here is the asset, that is the element, are being recognized, and here how it is being carried or shown in the statement of financial position if there is an asset, or if it's not an asset and that becomes expense, how do you show that in the statement of profit or loss? The issue is how much is the cost of property, plant and equipment that we need to show in the statement of financial position as part of the non-current asset, property, plant and equipment. So let's start with the initial cost. Initial cost is about how an item of property, plant and equipment should be measured. Here, or when it is first bought or first recognized or initially recognized in the statement of financial position. So Mfrs 116 provide that the property, plant and equipment should be recognized and measured initially at cost, should be initially measured and recognized at cost. So let us go and look into what is this so-called cost. So we start off by looking at elements of cost, which is referring to the initial cost. Since the previous slide here we mentioned about initially, so is the first time. Initial means the first time. And if you can see here under Mfrs 116, it can be divided into three, where the first one is it will be the purchase price plus or includes any import duties or non-refundable purchase tax. So this is the one that you need to add. And if there is any trade discount and rebates, this is the one that you need to deduct according to the Mfrs 116. The second one is the directly attributable cost. Okay, any directly attributable cost that is incurred to bring the asset to the location and condition necessary to be capable of the asset to operate in the manner intended by the management. So when the company bought the asset, the intention is to be used, for example, for delivery, if there is a van that is being purchased. So it should be able to be to prepare the asset for the intended use. So intended use is normally determined by the management, by the company itself. The third one, which is not really the focus of this discussion here, is the initial estimates. This will be covered later in a more advanced level of Mfrs 116. But somehow, the element of cost will also include some initial estimates of the cost of dismantling, removing or restoring the site on which the asset is located, where the obligation of the reporting entity is actually incurred on the date the item is being acquired. So meaning to say that as a result of having the asset to be used in a particular period, let's say for another 30 years or 20 years, the obligation has already arisen on the day the asset is being acquired. So therefore, that has to be included as part of the elements of initial cost. So there are three elements there. Let's look at the first element, which is the purchase price. Purchase price includes import duties, as I mentioned, non-refundable purchase tax, but must be deducted with trade discounts and rebate. And in arriving at any purchase price, any trade or the cash discount shall be deducted from the purchase price or the invoice price or the lease price, irrespective of whether or not the cash discount is taken. So if there is any trade or cash discount, you need to deduct against the purchase price or the invoice price or maybe the lease price. Next is the directly attributable costs. Directly attributable cost is, I mentioned earlier, the cost to bring the asset or prepare the asset for the condition intended by the management to be capable of operating or functioning in the manner intended by the management for the intended use of the company. So these are some elements that are included or some example of directly attributable costs. The first one is the testing cost to see whether or not the asset function properly. Trial run, for example. Cost of site preparation before you can construct a house, for example, a building. Cost of site preparation such as this cost here, surveying, clearing, leveling, grading, and any other civil engineering tasks. Insurance on purchase of the asset, shipment insurance, and basically here is also included. So you have examples here are all under Mfrs 116. So printing costs to the motor vehicle or the van, delivery van, to put the name of the company is part of the initial costs under directly attributable costs. And modification cost, if the van needs to be modified to prepare the asset for delivery purpose, that should also be done so. Any regulatory inspection cost, perhaps for certain equipment that needs the regulatory inspection cost. Professional fees that need to be incurred to pay to the architectural or engineering work directly associated with the installation, construction, or initial testing of the asset. And other overhead costs directly associated with the installation and construction. So basically, for example, what you can see here is just the one taken from the Mfrs 116 example. Elements of initial cost for decommissioning. For decommissioning, the initial estimate of the cost of decommissioning, dismantling, and removing the item and restore the item to the site is located are to be included in the initial measurement of the related PPE. Let's say we talk about a gym equipment that was installed in a building, right? So after 10 years of using that, perhaps that has to be dismantled. So that is also to be included later. Not later, but to be included as early as the initial cost. The obligation for the cost to be incurred at the end of the useful life of the asset needs to be recognized on the date of acquisition, and that has to be measured in accordance with Mfrs 137, provision, contingent liabilities, and contingent asset. Next one is that this would also need the company to incorporate the best estimate of what is the present value of expenditure to be incurred in the future. If it's in the 10 years time, the cost incurred was 100,000. What is the present value of that 100,000 on the day you acquire it, which is today? How much is the present value? And therefore, a provision for the cost expected to be incurred to settle the obligation at the end of the useful life. Let's say provision for removal, provision for restoring, or maybe provision for decommissioning, for example, or provision for dismantling, needs that has to be actually incurred to settle the obligation at the end of the useful life. And this obligation for that property, plant and equipment, the related property, plant and equipment has to be actually incurred and be included in the initial cost on which the obligation has already existed. The obligation has already existed when the asset is acquired or consumed, even though that will be incurred in the future, but today or on the date of acquisition, you need to know what is the present value or today's value of the future costs of that, let's say, removal, restoration, decommissioning, or dismantling. And you can refer to the textbook that we use by Mr. Tan Leong Tong, the Financial Accounting and Reporting in Malaysia, page 400 for details. And these are some element of an initial cost that relates to initial estimates of dismantling, restoring costs. These are the examples that you can read it yourself, where some of it is, for example, you can see here where that could be related to timber concession, where the company may be required to replant the trees, because for your information, normally trees are also part of a PPE. Yeah, they are also PPE because they are bearer plants. And estimates of this cost has to be included in the initial cost. So the initial cost must include or must also incorporate the initial estimates of restoration, dismantling, decommissioning, as provided by the Mfrs 116, and you can refer the textbook page 400. Next is the initial cost. Now is to calculate how much is the initial cost, and here is the initial cost, be perhaps of a building, a land, or perhaps a motor vehicle, or any other costs for the equipment, for example. How do we calculate that?